Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachardis, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing the latest CPI data out on Wednesday and the potential reaction in the dollar. So Marios, before we take a look at the CPI forecast, let's start with what happened last week when incoming President Biden announced that his administration is planning to pass a new relief package worth trillions of dollars. The stock market and the dollar rallied higher on the news, even though promises of huge government spending are usually a negative signal for a currency. So what has changed?
Hello, Maria. Well, in a nutshell, what has changed is that the markets are becoming more confident that all of this spending will turbocharge the US economy. So the narrative so far was all of the Trump-era stimulus would help the recovery and it would generate some inflation down the road, but without any spectacular growth. Now, with the Democrats promising even more juice for the economy, investors are bracing for a period of scorching US growth, of US economic outperformance. And that, in turn, the expectations for a stronger economy are leading investors to reconsider how quickly the Fed might begin to withdraw some of the massive support and the massive liquidity it has unleashed, when it might begin tapering its QE program. And that all of this has breathed some life back into the dollar. Now, in the near term, I think that the most important variable about whether or not this can continue is Thursday's announcement by President-elect Biden about the details of these stimulus proposals. He will tell us how much the package will cost and what sectors it will be aimed at and so on. So I think that the price tag will be the most important metric here. If we get a package worth around 3 trillion, for example, that could reignite this growth rate, whereas something closer to 1 trillion might be seen as somewhat of a disappointment. Overall, the more he promises, the better the outlook for US growth would be.
Okay, now, what are the risks surrounding the CPI inflation forecasts? And what's the outlook for the dollar?
Well, the forecasts suggest we are not going to see much change in the CPIs. However, if you look at what the PMI surveys have been saying for the month, they suggest some upside risks. So the market PMIs showed a very sharp increase in prices charged by firms, and the price components of the ISM PMIs have also risen very sharply in recent months. So we could see an upside surprise, and if that's the case, I think it could intensify speculation about how quickly we might see the Fed tapering its QE program, perhaps as early as 2022, and that could give the dollar some more reprieve and may allow the recovery to continue. Now, in the bigger picture, I think that this recovery has some more miles left in the tank. The Fed will be in a position to start withdrawing support much sooner than other central banks, especially the ECB. The US economy is also ahead of Europe in the vaccination race. The US economy is stronger than the European one right now, and there's more stimulus in the pipeline, whereas in Europe there isn't that much coming. So overall, I see a situation where the US economy will outperform the European economy, and that, I think, will help the dollar extend the current recovery. Whether or not this is a new uptrend will depend on whether or Europe suffers a double-dip recession, on how risk sentiment evolves, and how the US economy performs over time. But for now, I think that this dollar recovery can continue.
Marios, thanks so much. And thanks for joining us at xm.com.